All right. Should be streaming.
Just waiting to get confirmation on my end over here. So, what's going on, everybody in the chat? I don't know why, but it never loads on my end for some reason. So, what's going on, guys? It's K-Dub here with another episode of Crypto Zombie. I'm here today with Mark Moss. It is an honor to have you on the show, man. Thank you so much.
Yeah, man. Stoked to be on with you. I love watching your show. It's been fun hanging out in real life when we've been able to meet up at some events, and always fun just to hop on with someone like you and chat a little bit. So I'm stoked. Just everyone coming on, answer some good questions tonight, have some good convo.
Yeah, absolutely, man. So I guess basically for my channel, because this is the first time you've been on, everybody knows, I'm just like the guy, I do news, whatever. But what do you do, man? What is your thing? What's your background? I know you've been involved in traditional markets for quite some time. So kind of give us a little bit of a background.
Yeah, perfect. So yeah, for those of you guys on the Zombie channel, I'm Mark Moss. I have a channel you can find. Hopefully, put the link down below. Market Disruptors. We talk about disrupting markets, and so I've been a professional investor for over 20 years. Also been investing in businesses, an entrepreneur, but I've actually been investing in real estate, oil, gas, silver, gold, different types of options, all types of things like that, I'm kind of old enough to have lived through a couple bear markets, but young enough to still kind of get the technology a little bit. And so, I started investing in real estate right at the bottom of the real estate crash. I invested through the internet boom. And so that's kind of given me a unique perspective. And I typically talk about, if you go on my channel, I talk about like big level stuff. So I talk about big kind of geopolitical events and how they affect us like fundamentally. So when laws and rules change, like what that's going to mean for us in the future, things like that. I've just finished, I did a 4-part series that got really, really well reviewed, and it was Wall Street coming to Bitcoin, what that means, what Wall Street does, the dangers. That was really good. And I just finished up a 3-part series that's really cool that was talking about the largest wealth transfer in history coming, and that happens through technology cycles, and how technology cycles are different than any other investment you could make. And understanding the 4 phases of a technology cycle is really key to making life-changing profits from that. So that's the kind of stuff I talk about.
Let's talk about some of that. I mean, where do you want to begin? I mean, for me personally, I think everybody right now just wants to know what is going on in the markets personally, because, we fell, and then we leveled out, and then we fell some more, and then we fell some more, and it was kind of just like, when is this thing going to end? So, in your experience, what do you really think is going on? Now, you just brought up global stuff, right? And right before we started, I noticed you were talking to me about the thing that's going on in France right now, right?
Yeah.
And you seem pretty passionate about it. So do you want to bring that up? Do you think that these types of things that happen have anything to do with the markets? You could talk about actual events like that, but even people saying that, we're not even decoupled from the stock market. So how does these things that happen globally affect?
Yeah, so there's a couple things there to unpack. So first of all, like I said, the first video in that series talked about how technology cycles create these opportunities for wealth transfers, and how if you look back through steam engines, railways, automobiles, or internet, it's always a different set of people that get rich. It's not the same people, so it's a new opportunity for new people. And then understanding the 4 phases of a technological development is the key, right? So to answer your first question, where are we right now? Everyone's getting wrecked. What does that mean? Really, I want to answer the second question first. So the second question was, and it actually was for the second video that I did in that series, and I talked about the trend. The trend is crypto, and then throughout the trend, we have different trends within the trend. So, for example, when the internet was booming, in the early days, it was like you wanted to invest into browsers and search engines. Then as the internet advanced further, then you wanted to get into platforms. And then as the internet progressed even further, then you started investing into apps or applications. So the way you invested was different as the trend developed. But there's even a bigger trend. All right, there's a much bigger trend, and I talk about this in the video, and then it's in the news. So if you guys haven't seen what's going on in Paris or in France, and now really it's spreading through Europe, is massive. There's massive protests going on. Somewhere between 50,000 plus people are out there protesting. And the reason why this is important is because there's this massive shift. It's a trend. And so I have a whole video on Thursday that I'm going to do. So I'm not going to get into the super deep. If you want to know more about this topic, make sure to tune in Thursday. But basically, we have this pendulum that shifts, and it goes from centralization to decentralization. And the world was in this centralization shift, and now the world is going back to decentralization. And Bitcoin is about decentralization. Right? It's decentralizing the power, the centralized power. And so we have this global shift, and we have a technology shift that fits right in that trend, and then there's trends within the trend. So yeah, super powerful stuff.
Well, Mark, I mean, you're speaking about this as far as the shift of centralization to decentralization. We're talking about these other places, but what about here in the U.S.? Is this something that's happening here as well? I mean, you know,
it's a global shift, so it's going to happen all over the world. So I always try to encourage people, unlike other investments, well, not unlike other stuff. So if I invest like real estate or stocks, I mean, that's kind of locally to my country. But if I'm investing into oil and gas or gold and silver, then you have to think globally. And crypto is global. And so just because in the United States, it may or may not affect us as much doesn't mean that the rest of the world isn't. However, to answer your question, yeah, I think people in the United States are searching for decentralization. We see this, right? We see it with all the censorship that's going on across like social media, for example. We know we need decentralized solutions for that. We definitely see it. The whole world sees it because of the United States, because the US dollar is the reserve currency of the entire world. And the Fed continues to print money like it's going out of style. The last video I did last week, I kind of put this into perspective. In the last 10 years, the United States has added more debt than all of history combined. So from 1913, when the Fed got enacted, all the way through to 2008, if you add all that debt up, we've added more just in the last 10 years. It's crazy.
Oh, it's massive. It's massive. I just talked about that on the channel, dude.
And because the United States dollar is the reserve currency, when we inflate our currency, we push that inflation to everybody else. So yeah, we worry about it here. We need to worry about it here in the United States, and the rest of the world does.
I mean, but what do you say to people now? I mean, as far as this, you had a lot of people invest. A lot of people got wrecked, man. I mean, and you see, you're the smarter guy. You only put a percentage in. You're actually risk managing it, right? I was the guy that just went all in. I got excited last year in May. I just fell in love with the tech, and I just went all in. Not financial advice. Don't do what I do. But what do you have to say about these people, man? I mean,
well, I think first I would go back to say that like understanding how technology cycles develop is, like I said, the key to really being successful. And so if you go back and watch that video, I really get in deep into that. But basically, this is kind of par for the course. So there's been 5 technological revolutions in the last 200 years. And they all kind of unfold the same way, where you have kind of these early adopters, true believers that come in, and then the money gets ahead. So the money gets way ahead of the technology, and you kind of create this bubble. And then it kind of crashes down, and then it gives time for the technology to kind of catch up, and then get back into that second phase. And we can see this through all these technology revolutions, but definitely in the internet was the most recent example. So like Amazon, for example, launched in '97 at $1. By 2000, it was $80. But you couldn't really use Amazon. There was really no fundamental reason for it to be that high, and then it came crashing down to $5 or $6. But that didn't mean it was over, and just recently it hit 2,000. And so we're in the same phase where, we have volatility, right? The market's super volatile.
Well, that's one of the main reasons most of these people don't want to get in. I mean, they just did a recent study that said most people would love to get in, but the volatility is horrifying, especially for people in the West, where we're not used to, the whole joke is by the time you get up to the counter to pay for your cup of coffee, it's not worth what it was when I opened the door. Yeah. So what is your thoughts on that? I mean, that's something how do we overcome that?
Yeah, so that's a great point that you bring up. And what I would say to that, and what I would just say to everybody overall, is that everyone just needs to learn patience and perspective, because I think everybody's expecting way too much way too soon. And so you're right, it's way too volatile. Yes, Bitcoin is too slow. Yes, Bitcoin isn't a good store of value today. Yes, Bitcoin transaction time, yes, Yes, all those things. But the same could be said about any technology. And there's lots of famous quotes from when the automobile first came around. All the guys sitting on porches with their horses, going, "Look at that stupid car driving down the road. It's getting stuck in the mud. We can't even get down the road. There's no need for that. It's noisy. It's smelly." Yes, it was all those things, but that didn't mean it wasn't going to come and it wasn't going to change. And the internet, kind of the same thing, right? Where like I said, I invested in that space, and in the late 90s, it wasn't even usable. We had dial-up. It was so slow you couldn't even download anything. And we didn't have broadband until 2003, and so in the late 90s, 2000, everyone's like, "Oh, this is never going to work. You can't even download anything. You can't even use the internet. Like, it's forget it, right?" And so I see people saying the same thing, and what I tell people is just like, man, have patience. It takes time for technology cycles, and that's why understanding them is key. It takes time for them to unfold, and being an investor across multiple categories, it takes time. So, like for example, I'm in this oil field. I'm part owner in the GP, so we own the land. We're drilling the wells. We have 8 wells dug so far. We're trying to raise the money for 15 more. I've been in this deal for 2 years. I haven't gotten any money out of it yet. I'm not expecting any money out of it. In another 2-3 years, I'm hoping to make a ton of money. But I'm going to wait 4 or 5 years, and that's fine. Right? I've developed lots of these real estate deals where I buy the land, rezone it, build it up. Those are 3 to 5 year projects. So to expect, like, at the end of 2017, you'd buy it a month later, you made money. For anyone to think like they're going to get rich in the next 6 months, I mean, it's just not realistic. But I believe that you're going to make life-changing wealth if you could wait 3 to 5 years.
That's hard in crypto. Because like you said, in the traditional world, yeah, these things take time. You're waiting multiple years to see your returns. Whereas in crypto, I mean, you got people just leaving all their coins on an exchange and just sending them back and forth as fast as they can and making trades. And this is why it's such havoc. I mean, we've never had this ability to just transfer assets so quickly, 24/7 market. It never sleeps. And, I don't want to call it an experiment because I don't think it is an experiment, but it's something that I believe in to be, a life-changing event. But at the same time, we're finding out all these different things, and we're running into walls, and we're running into problems, and we're having scalability issues with some of the blockchains, and they can't keep up with the dApps. And like you said, you compared this to some of the earlier ones, but I also on my channel like to talk a little bit about not like conspiracy, but like, let's be real, because you're talking about the car, right? The automobile. Now that originally I would say would be a threat to the guys with coaches and horses, right? You were threatening their business. So sure. I remember there was all these things that had, well, not like I lived there, but I had read about how they came out with these things that were saying, oh, automobiles are dangerous, and they required you to have 3 people to ride in automobiles. There had to be 1 driver, 1 person that was like an engineer, and then another guy to walk in front with a flag, which is absolutely ridiculous. I mean, do you feel that these people are they going to go down easy is what I'm saying? I mean, this is threatening the system.
They're definitely not going to go down easy. Now, I just wanted to say one thing before I answer that question. So, in the title on my channel, we got people watching on my channel as well. Everybody who's watching on my channel, hopefully you're digging my talk here with the zombie. In the description below, I have links to his stuff, so go ahead and give him a follow for sure. And then make sure you're giving us likes and comments on this. We do this for free. We're not trying to sell you anything. We spend a lot of time, and we do it for you, so give us some likes, and that tells us that you like this stuff. And then on my channel, I respond to every comment, so I love having conversations with you guys, so make sure to leave me comments as well. Now, I did put in the title that we were going to talk about, with the prices going down, what's happening with Ethereum Classic, Vertcoin, and even Bitcoin. We're going to talk about that. And I bring that up because I see questions in my comment feed.
Let's do it.
Well, I want to get to that, but I want to answer what you're talking about first, because we're going to talk about kind of the market sliding down. We'll talk about the dangers of Ethereum Classic and Bitcoin, and then we'll talk about that. But back to your question about maybe some sort of a conspiracy going on and whatnot. I wouldn't say that word is meant, is thrown around and makes people sound kind of kooky. What I would say though is I think there was definitely some manipulation going on to a sense. So like, very simply, markets stop going up when there's no more buyers. Markets stop going down when there's no more sellers, right? It's super simple. And at the end of 2017, like 1% or 2% of people had ever bought Bitcoin or cryptocurrency, right? There was hardly anybody. And as it got super feverish and parabolic at the top, everyone that knew about it was in buying. That was it. And then what happened is We saw the banks shut off all the on-ramps, so no more money could get in. You couldn't connect your bank account to Coinbase and all those things. You couldn't use your credit cards. And then at the same time, strategically planned, whatever, Facebook, Google, Twitter, they all banned advertising. So markets stopped going up when there's no more buyers. Well, no one could put any more money in, and there was no marketing, so nobody could hear about it. So of course there's no more buyers. Of course markets stopped going up. Simple, right? Now, why? The conspiracy, why? Right? So Wall Street, the banks, Facebook, the media, they're all together, right? And maybe, I'm not saying this is fact, but maybe all these people saw all these people getting rich and thought they missed the boat. And they're like, e-brake, hang on. We need to get ready for this. Let's shut off the on-ramps. Let's shut off the marketing. No more buyers get into the market. Now we'll start building, and then we'll launch when we come back out. So the reason why I think that, and it's kind of clear in hindsight now, is just about 45, 60 days ago, Fidelity, TD Ameritrade, New York Stock Exchange, IcePac, they all announced that they're going to launch these Bitcoin trading things to their base. Well, those things don't happen overnight. That's stuff they've been working on for a year.
Yeah, exactly.
So
that's a good point. And it's not like they just came in out of nowhere. They've been planning this for some time.
Yeah, they got to work with regulators. I mean, they got to build the platforms, all these things, right? So they've been working on this for a year. And what's funny or coincidental or conspiracy, whatever you want to call it, is at the same time they come out and said that they're going to launch these products, all of a sudden Facebook and Google said that they're going to start allowing advertising, but only for approved people. So kind of coincidental. Now, what does that mean? The positive side of that is that means more new buyers come in, right? So that means hopefully there's hardly any more sellers left, so the market stopped going down. Now these marketing powerhouses, Fidelity, TD Ameritrade, they set up shop. They've been buying all the OTC stuff. We know that. They turn on their advertising, and now new money and new buyers come in, and the market takes off again.
So what do you think about that thing that I first heard it from Crypto Daily, but he got it from somebody else, where he was like, if a retail investor misses the train, you miss the train. But if the institutions miss the train, they pull the train back or something like that. I'm kind of paraphrasing it, but it seems like that's sort of the overall point of what we're saying right now.
Yeah, that's a perfect analogy for it, for sure.
So what was the topics that you guys said that you wanted to talk about?
Yeah, so I see someone asking about supply of Bitcoin. They've thrown that in my thing a bunch of times. Supply of Bitcoin, there will never be more than 21 million for sure.
Unless we just make some more forks, then we can print free money. And
what I would say to that, though, is that people think that forks is so wrong with the industry and it steals value away from the main chain. But I just don't see that, right? There's probably been, 50 forks at least of Bitcoin, and hasn't. I don't think it's taken value away from Bitcoin. And think about it like this, like Coca-Cola is like a world dominator brand.
It has taken value away, though, because if you look at the market dominance, Bitcoin used to have a 90% dominance, and now we're only sitting at 50. And I think that once we get whenever the next bull run comes in, or whenever the next, phase of the cycle is, I think that it'll drop even lower, personally.
I guess to a certain extent, right? So if what I was going to say to my analogy is you have Coca-Cola, which is a world dominator, and sure, you have your Sprite and your Pepsi and whatever, and yeah, I guess they steal a little bit of market share, but you have like every grocery store out there sells Coke, but they usually have like their in-house generic brand of Coke too, and that doesn't steal value away from Coke. Sure, maybe a couple people buy that instead of Coke, but it hasn't really damaged Coke, the brand, right? And it's kind of like that. So, Bitcoin Diamond, Bitcoin Gold, like no one's ever going to switch to that. But even if they do, it's just value, and that's a whole other topic for a whole other day. How I see value flowing in the future. Super interesting.
I'll tell you one thing that you have been saying, and I'm going to call you out on it. 100 trillion market cap is possible. Like, do you want to explain how that is? Because that's crazy. 100 trillion market cap. What are we sitting at right now? Like 125 billion, I think.
You're talking about my video where I talked about 100 trillion market cap?
Yeah.
Well, you got to watch the video to get the whole gist of it. But basically,
you got to watch the video for everything.
Because these are deep subjects, and I try to make them super easy to understand. But like to try and cram it into like 20 minutes or 30 minutes is really tough. But basically, how it works is that each new technology pulls value from the previous, right? So, for example, You had the automobile industry. The automobile was a new technology at the time, the assembly line, all of that. When the internet came, it took value from that. Now I don't need a car because I can just telecommute, for example, right? And each technology builds more value. So Henry Ford was super rich, and he had about $180 million in 1900, which was a lot of money. But compare that to Jeff Bezos today, he's like 100 billion. So from 100 million to 100 billion. So, and then what's going to happen is this new technology, like a blockchain technology, will start to steal value from the other markets, and it'll get bigger than this one. So, for example, just real simple, there's about $80 trillion just in cash in the world. 80 trillion in cash. And I'm not saying 100% is going to go into that, but maybe a big chunk. Maybe we'll see 20, 30 trillion of that. So there's 20 or 30 trillion. Let's say like gold, for example. The reason why people hold gold, I hold gold personally, is a chaos hedge. It's an inflation hedge. And so that's why people hold gold. That's about $8 trillion today. Well, people are buying Bitcoin for the exact same reason, digital gold. So it's very easy to think that a big chunk of that 8 trillion will come over. So maybe there's another 4 or 5 trillion. We have all the securities in the world, a couple hundred trillion. So we're going to see some of that come over. So anyway, I break it down sector by sector, but we take a little bit of value from each one of these sectors, and it adds up to 100 trillion pretty quickly. Again, this isn't overnight. This is over time. And just to put things into perspective, like there was people playing with internet technology in the 70s and the 80s. We didn't have the first website go live until 1990. By 2000, only 15% of people had ever bought anything online. So that's like 20 years later. So, we're talking 20 years from now, this stuff is going to happen.
And do you think that there's a problem? Like, are you worried with centralization, or do you think that's just part of the ebb and flow of things? Like you said, right now the world is kind of tired of the centralization, so we're looking for these decentralized solutions. But, is there too much centralization in things like Bitcoin? I mean, one of the things that most people were upset about with the Bitcoin Cash hard forks is how these guys have the ability to move the market so crazy. I mean, you're just waking up, you're having your cup of coffee, oh crap, this guy just forked and now it's madness for the next week. I mean, is that something that people are going to comfortably want to get into just for the decentralized aspect? And do you think that eventually we're just going to find ourselves because think about it, how did we get to where we are now? Well, at one point it was kind of somewhat equal, sort of, and then we sort of built little groups that sort of had more power, and then you had the Federal Reserve, and they kind of pretty much laid all the rules out. I mean, you think that's going to just happen again? And then.
So what I believe happens is with disruptive technology, the incumbents, the people that are there with the market today, they don't want to be replaced, right? They're going to do everything they can to entrench their position, to hold their position. But new technology, it's just so disruptive that it gets rid of them. We call it creative destruction. So something creates new, and it destroys the old way. And it's kind of like Kodak. Like Kodak cameras was like over 100-year-old company. They were the world. They were the biggest thing in the world. But
Well, they ended up getting put into one of these things, and they lost.
Exactly, and there was nothing they could do about it. It was just too big. It was just too fast. And I see the same thing happening. This is actually a topic for a whole different video because it's so deep. But I believe that I'm going to do a real quick thing. So previous to the internet, if you can remember 1995 or any time before that, the only place you could get information was either in the newspaper or one of the three network television channels. Like that was it. So news, or not just news, but we'll call it information, was centralized.
Yeah.
Think about that. Today, because the internet technology allows the sharing of information. Blockchain technology allows the sharing of value. That's the difference between the two technologies. So with the internet technology, it shares information. So previous to internet, all information was centrally controlled by just one or two entities. I could either get it in my newspaper or I can watch the evening news. That was it. Today, though, information is all around us. It's everywhere we look. You're watching information right now. It's on my Twitter. It's on my Instagram. It's popping up. It's on Instagram. Friends are sending me. Information is everywhere. I don't need to watch the news today because I get information everywhere I go. And I believe that blockchain technology is going to do the same thing. So today, value is really just in money. And it's centrally controlled. but I believe value will be decentralized, and value will be everywhere around us, and everywhere we look is just value, and we're just interchanging value, kind of like we interchange information today.
So are you on the side of like tokenize the world? You like
for sure?
Yeah.
For sure.
Yeah, at first I thought it was crazy. Like when I first started my channel, everyone was like, tokenize this, tokenize that. I was like, come on guys, it's too many tokens. But when you actually start to think about it, it makes sense. It just doesn't make sense all the time from an investment standpoint. But it does make sense. You know, like even these smaller places, there's no reason why a mom and pop shop can't have their own crypto. It's no different than frequent flyer miles or coupons or point systems. Or, you know, you used to go and get those clips every time you'd buy food, and on the 10th one you get like a free sub. Yeah. You know, it's the same thing. So there's plenty of room.
Before we jump into that, let's just talk about real quick. So we're in this cycle, right? So now we're kind of in this crash, and the market's kind of down, and we're in kind of a dangerous situation, or I wouldn't say we are, but a lot of projects are in a dangerous situation today. So yesterday, one of the devs, ETC devs, announced that they're no longer going to be working on Ethereum Classic anymore. The market's gone too low, and they can't continue to work on it anymore. And, you know, that was a big high-profile announcement, but there's hundreds of these things that are happening every day that you don't hear about. And I want to say, first of all, that I think, you know, you need to look a little bit deeper. And they're not really the main devs that work on Ethereum Classic. Really, Ethereum Classic, you know, is IOHK from Cardano. Charles Hoskins is involved in that. So there's still a lot of dev going on in Ethereum Classic. So it really wasn't as bad as people thought it was. But then today we saw Vertcoin, because the
51% attack.
Because the price is so low today that it's easy for people to rent hash power and attack the network. And we're going to start to see a lot of these things start happening when prices are low. But I would say that this is part of the natural evolution of this cycle, because what happens is, like I said, in the first phase is the money gets ahead of the technology, and then you kind of have that first crash. And in every technology cycle, railways, automobiles, internet, you have about 90% of the projects go out of business. It's just what it is. You know, in the automobile boom, you had Henry Ford created this assembly line, you had Dodge out there, and next thing you know, there was over 100 automobile manufacturers. But then they all basically went bust, and 3 made it, you know, Ford, GM, and Chrysler. And that's just kind of how it goes. Same with the internet. You know, all these internet companies went bust in 2000, 2001, and the few that were remaining kind of bought up the technology, and then the industry grew. And so just because companies are going to go away doesn't mean the industry goes away. It's just part of the natural evolution. And so I wanted to talk about that. Ethereum Classic, I believe that there's still some good development going on there. I wouldn't believe the FUD. Vertcoin definitely is in a dangerous situation right now. But beware, because lots of projects are, right?
Yeah, well, you're talking about projects that have a little more, are a little more established, but it's even worse for these guys that were raising funds last year or this year. I mean, you know, they don't have half of, especially if they didn't liquidate and they held on. These guys are like holding 1/5, maybe even less of what they had at their crowd sale. This is crazy. You know, how are these guys going to actually deliver on their promises? You know, you're seeing, like you said, you know, ETC Dev. Look what just happened with Steemit. They had to lay off 70% of their staff.
That was a good one too.
Right?
Yeah.
There was another one too, and I can't remember, but they had to lay off like another 80%. So it's definitely rough times right now in the markets, especially for these projects.
Yeah, Steem was a project that I really loved. It was one of my favorite projects from the very beginning. BitShares and Steem, which were originally Dan Larimer's projects. Dan Larimer is the one who went on to found EOS. And both of those projects are amazing. And I feel we talked about the need for a decentralized social media, and so that's kind of where Steem was. I really hope they can pull it together. Hopefully laying off 70% of their staff is enough to kind of get through this bear market. If not, you know, we'll have another one. But it's gonna be dangerous. And so, you know, for any of you guys that are out there investing in this market, you just need to make sure that the projects that you're in are still doing what they're supposed to do. That the thesis, the reason why you invested into it, is still true. It's like it's still gonna happen. I did an interview with Matt Spoke, the founder of Aeon, yesterday, and man, he's one of the smartest guys in the space.
Yeah, I like Matt a lot. You know why I like Matt? Why I respect him? Because when you talk to him, the last thing he ever brings up is really Aeon. Like most projects you talk to, the first thing they talk about is what they're doing in their project. But like when you talk to Matt, he's more concerned about like the space, the community, adoption, solving the issues, the hurdles. I don't know. For me, that's just really cool when you talk to a CEO and they're more interested in the space than they are in their own.
So we did an interview and. I told him the way that I tell everybody is like, because again, right, investing in a new technology cycle is different than other markets. Really, you don't want to look at price. What you want to look at is innovation and adoption. If innovation and adoption happens, the price will catch up eventually. So I said, hey, let's talk about innovation and adoption. And so, man, they have done so much innovation and they're working on so much adoption. But we talked about the money. Hey, how are you with money? Are you going to run out of money? Luckily, they were pretty smart and they didn't keep all their money in Ethereum Classic, and they have a pretty good runway. So they can go quite a while without running out of money, and they have plans in place in case they do get to the end of that runway, and so they've already got plans in place. So, I think most good projects should be along those same plans or the same paths, but man, it's really up to you to do your due diligence and make sure the projects you're in are like that.
Yeah, absolutely. And most people don't. So, most people, unfortunately, will watch a channel like mine or yours or anybody's. And, if I say I like something, it's like, okay, I'm going to buy it. It's like, no, like I could be wrong. Like that happens, man, and.
Yeah. And I've been asked a million times, what do you think about this coin? Well, what do I think? I mean, I got a million thoughts. Like what specifically, right? Are you wanting to know? And so it's kind of like, you might like a coin for a completely different reason than what I may be looking for. And so just because I like a coin doesn't mean that it's a good fit for your portfolio, right? And so that's why, we always say DYOR, right? Do your own research and make sure it's right for you.
I think I've been focusing lately on more projects because of the bear market, because of this, the speculation. It was really fun when everything was pumping. You could just kind of guess on anything. But now I'm really just focused on those working products, guys that actually got things. Like, for example, what, Serum Labs has with the Finny phone. I mean, that's a product. They're shipping it. It's out. You can use it. That's something that I see, potential for as well. It's amazing how you go in the first page of CoinMarketCap, and there's a lot of projects that are in the top 100 that really don't have anything of substantial value. It's I don't know. I mean, what do you think? Like, you're saying that we're where we should be. I mean, do you think are we moving too slow, or you think this is fine? We just need to step back a bit.
Yeah, so I'm going to answer that, but I see we have quite a few people hanging on my stream. Hopefully you do as well. We're going to do some Q&A, so hopefully you guys are going to stay to the end. Just a few more minutes, we'll start some Q&A, so make sure you're sticking around. And again, if you guys are just here, give us some thumbs up and likes on this. We're working hard for you guys, so give us some thumbs up and likes. Leave me comments so we can start those conversations like I like to have. Now, to answer that question, I would say that we are right where we need to be. I believe that the innovation is so each technology cycle has a shorter adoption curve than the previous, and we're adopting way faster. Yes, Bitcoin's been around for 10 years, but most of the crypto assets are really 24 months old, and I think we're moving along just fine. What I would say again is patience, but like I said, make sure you're in the right projects for the right reasons and the ones that are going to be the Amazons that make it through, and not the pets.com that went bust. So you need to make sure you're in projects. I mean, I would guess there's probably less than 50 projects that I would even consider putting money into at this point. And so I don't think right now is the time to be chasing those penny stocks that are going to be the unicorns. It's funny because it was about a year ago I made a video and I said, hey, we're going to have a big correction coming. And when we do, I expect this mass flight to quality, because what happens is everyone's going, what the heck am I even holding here? Like, what are these stupid coins, right? Like,
yeah, exactly.
Yeah,
so
right.
You do start to wonder that. There were last year, man. There were so many projects that came out, and you're like, yeah, and then you look in your portfolio, and you're just like, wait, what is this thing doing now? Like, it's just speculation. It doesn't. And that's where the utility issues are coming in too with these STOs. But I know that's for another night, another time.
So I got a comment, and I want to address this real fast. So someone said blockchain projects trying to fix scalability issues after launching is like an engineer trying to fix an engine while it's moving. But no, it's not. And the reason why I want to bring this comment up is because it's basically what you just asked me. Is it moving along fast enough? So there's this big myth out there that Bitcoin and Ethereum can't scale and they're too slow. But I'm going to tell you that that's not true. And here's why. Gold has been the basis of every major currency for the last 5,000 years. Okay? Now, and even until 1971, not that long ago, 1971, all the world currencies were basically backed by gold until 1971, not that long ago. Now, for me to settle with you in gold is slow and it's expensive. I'm going to have to get an armored truck to come to my house next Thursday. I'm going to load it up. They're going to drive across the country to you. It's going to cost me a lot of time and a lot of money to settle with you in gold. So what happens? That's layer one. Layer two was I can put my gold at the bank and they'll give me paper certificates for the gold. Now, instead of having to move the gold, I just give you a paper certificate. That's a layer two scaling solution. Then layer three becomes like a payment rail. Now all of a sudden my bank will give me a debit card that's built off of the paper that's built off of the physical. That's a third layer. Then there's like a fourth layer where now we have a service provider like MasterCard that builds a layer on top of the bank's layer. Now that's like a fourth or fifth layer. Those are payment rails. So for someone to compare Bitcoin speed to MasterCard is comparing two different things. MasterCard is a payment rail, a fifth or sixth layer on top of a settlement layer. Bitcoin is a fast settlement layer. And think about this. If anyone's ever had a merchant account, like you have a store and you accept credit cards, if you swipe a credit card at your store, how long does it take you to get those funds into your bank account?
They don't go through until you batch out. They probably go in the next day usually.
Well, it usually takes 3 to 5 days for those funds to be deposited into your bank.
Oh, you're talking like, okay, well, I mean, I used to have a business. I mean, for us, we had the technology now. They can go and usually they kind of got up to date. But it still takes a day. Maybe for some cases it takes 3 to 5. But either way, that's a long time.
And how long does Bitcoin take? An hour?
Yeah, I mean, yeah, usually.
Whatever, right? So it's faster.
I mean, you can get a confirmation in 10 to 12 minutes, but they're not. If you're sending it to an exchange or something like that, they're going to require multiple confirmations. So yeah. Probably like an hour.
Yeah. So Bitcoin is a base layer. It's a settlement layer, and you want it to be slow. It needs to be secure. You want to speed things up on a second layer and a third layer, and we have that technology today. I could use Loom to build a second layer on Ethereum right now, and I could have the exact same speed and throughput and cost as EOS. I can build a DPoS system on top of Ethereum right now. So the technology is already there. We already have second layer scaling solutions. I don't believe that the base layer should ever be the same speed as MasterCard. Just doesn't need to be. We have second layers and third layers for that. Not everything needs to be settled on the main chain. So I think we're right where we need to be. I think we need more education is what we need.
Yeah, man, definitely. And you're certainly providing it on the chat today. I just want to give a huge shout out once again and say thank you for coming on my channel, man. You're like a wealth, like a fountain of knowledge. I think that's the word I'm looking for. A fountain of knowledge, my friend. So really appreciate it. So you said you wanted to hop into some Q&A. Do you have any, does anybody on my side have any questions for Mark?
Yeah, what do you got?
That you guys want to ask? While we're kind of waiting for things to pop up,
let's talk about real quick. We were talking about before we started. We were talking about if you're wrecked.
Oh yeah. This is a good topic because a lot of people are wrecked. So
if you're wrecked, what can you do? What should you do? That's a really good topic that we should just touch about real briefly here. So for everyone watching, we were engaged in this conversation before we went live, and I said, hey, let's table this because people probably want to hear this, right? So what to do if you're wrecked? So first of all, you should never be wrecked completely. So what that means is the number one secret to having success in investing is asset allocation. So the best investors in the world are smart enough to know that they don't know. They don't know what the future holds, and so they don't ever put all their assets into one allocation. I had to learn the hard way. I had all my money into real estate, millions and tens of millions of dollars. I lost it all. It was really bad. I had to learn the hard way. So don't learn the hard way. You do asset allocation. So never put all your money into crypto never put all your money into anything. So you want to put your money into different assets that are not correlated. So if this asset goes down, this asset goes up. So first of all, you probably wouldn't want to put, so you got to figure that out for yourself. I can't tell you that. 10% of your investable assets into crypto, 20%, whatever that amount is. If you lose everything you put into crypto, it's only 20% of your money and you're still okay. Your life isn't wrecked. That being said, let's say that you did buy in January or February and now you're down 80%. What are you going to do? Well, a couple things. So first of all, you need to reevaluate your portfolio. And if you're in junk positions, you need to get out of them and move into better positions. Now, everyone's out there telling you hodl, and you only lose when you sell, right? Well, I'm not saying to take the 90% loss and walk away. I'm talking about just transferring to a different position. Basically, you're betting that this one's going to go up faster than the one you're in. So it's not the same as taking a loss. You're still in the ecosystem. So evaluate positions, get rid of the junk ones, move into the ones that you think are going to be the best. And then what you want to do is hopefully if you didn't put 100% of your assets in, you have a little bit of capital left over. And now, so if I wanted to put 20% of my assets into crypto, well, now it's down to about 5% of my assets because it's fallen so far. So that means I should put money back in to get me back up to 20%. So I can buy back in today at these bottom base prices, and now it averages my cost down. So if I had bought Bitcoin at 10,000 and now I buy at 3,000, my average cost is now about $6,000. And now I don't have to go that far to get back to even. See how that works?
Yeah. It seems though, like recently, everything's kind of been moving in tandem with itself though. I feel like the stocks the stocks went down, crypto went down, and even, I don't know how real estate globally is doing, but I know a few friends that I know that have rentals have kind of had to pull back on some of the prices, or else people just weren't renting the spaces and stuff like that. So,
yeah, I mean, the global financial system is definitely shaky for sure. But, for example, with real estate, for me, real estate is my end game. All the money I make is going into real estate, into rental properties, and it's rental income, it's passive rental income. And what I've seen living through a couple real estate crashes is that as people lose their homes, they turn into renters. So rental markets usually heat back up. So you need to make sure that you're finding assets that are non-correlated like that. But as far as the cryptocurrency markets being correlated, they definitely are. But I think again, with the right time frame, over the next 1, 2, 3 years, you'll really start to see Bitcoin and some of these good ones distancing themselves from the rest of the coins out there.
Mm-hmm. Someone in the chat wanted to know your thoughts on EOS. Do you have any opinion on it, or?
Man, if I put my thoughts out there, I'm going to get crucified.
Okay, we'll leave it for another.
No, what I would say about that, and I'm not going to say specifically about EOS, but what I'm going to say is that I'm a little bit of like a maximalist, kind of a little bit, in a sense where I believe that Bitcoin is a revolution. Bitcoin gave us a way to transact peer-to-peer, censorship resistant and immutable. And I kind of think, like, if I don't need those qualities, then what do I need to be in the space for? Like, a database works pretty good, right? So I want to make sure my base layer is hard. My base layer is immutable and censorship resistant. Then I can build softer layers on top that don't need to be sovereign grade censorship resistant. So with EOS, their narrative is, hey, we don't need to be sovereign grade censorship. We just want to be platform grade. But I don't believe there's such a thing as immutable-ish. I think you either are or you aren't. And so that's kind of how I feel about EOS. Now, from an investor standpoint, a trader standpoint, could you make money with it? You certainly could. Do I believe it'll beat Ethereum out over the next 5 years? I don't. No.
So no. Oh yeah, because somebody was asking. I mean, there were a few people in the chat. I don't know. I missed it. It was people were saying Ethereum is dead, and like all they had really were the ICOs, and now that the ICOs aren't using it, that's pretty much became its only purpose. I mean, I think it became the purpose because it was a really unique and simple way of fundraising. Honestly, but I don't think that that's the be-all, end-all solution for Ethereum. I think Ethereum has a lot in store the same way that you said with Bitcoin. I mean, Bitcoin is slow, clunky, it's old, it's number one, right? Well, Ethereum used to be number 2, now it's number 3. But, like I said...
But it's not slow, clunky, and old, right? It's exactly what it needs to be. So all the new development happens on the second and third layers. So you want that gold is slow and clunky, and you want it to be like that because it's a main settlement layer. When you're settling trillions of dollars, it needs to be slow. It needs to be secure. So all the innovation, all the little hype tricks and whatever happen on second and third layers. I see some questions people are asking about if you're wrecked and you can buy back in to average down. They were wanting to know, should we buy right now at these prices or when should we buy back in? So neither one of us here, K-Dub and myself, are what we consider technical analysts or traders. I don't believe it's possible to time perfect tops and bottoms of the market. So because we don't know that, what we do is we average in. So and we always look at risk and reward. So right now, Bitcoin's sitting at, whatever, $3,800. Maybe it could drop 50%. Maybe. I don't think it's going to. Maybe it drops to 3,500. Maybe it drops to 3,000-ish, potentially. So what you could do is say, okay, well, I'm going to buy some at 38. If it drops to 35, I'll buy a little bit more. And if it drops to 3,000, I'll buy a little bit more. But if it doesn't, then I'm going to average back in. But at least, you're just kind of getting in. You're not trying to pick the perfect time because that perfect time may never come. And from a risk to reward ratio, maybe we have, a 30, 40% drop to the downside. But I think Bitcoin getting back up to 12,000 it should be done pretty easily over the next 24 months. So that means I have about a 30% downside, a 30% risk with a 300 or 400 time upside. I like those risk and return
and
ratios.
Mark, not even just talking that, just to talk like actual physical amounts. It's a lot easier to move a lower market cap to double. You know what I'm saying? Like if you have a market cap at 20 million, it's a lot easier to go to 40 than it is if you got one at, let's say 1 billion to go to 2 billion to double your money. Yeah. So as it does go lower, it actually does become easier to get those gains back again, if you kind of look at it that way. And I don't know where the bottom is, dude. We might go down to 1,000, but for me, from what I've seen since I've been in it, I bought my first Bitcoin at 2,200. This is as cheap as I think for me. Personally, I'm not saying, I've bought more. So I've been buying Bitcoin down and I'm going to buy it up. It's just how I roll, so, but everybody has to do what they're comfortable with, The
thing with Bitcoin is everyone's saying that Bitcoin has a floor as how low it will go because of the mining cost. And that's not really true. So Bitcoin is built on game theory. So the more people that are mining it, the difficulty rating goes up and the less coins they get. And then it gets more expensive. And then so now it's too expensive. People aren't profitable. So they shut their machines off. And then all of a sudden it gets easier. And so they left. People are now making money again. And so it kind of has this game theory. So the price will be where it needs to be. So it could potentially drop below the cost to produce a coin because the cost of the coin will come down. But
one of the downsides, though, not to cut you off, Mark, though, the one thing about the original Bitcoin difficulty, though, is it takes so long to adjust. Whereas the one thing that I do have to say that they did kind of work out with these newer forks is that the difficulty adjusts in real time. Whereas with Bitcoin, you're looking on average usually 2 weeks for proper adjustment, which is a long time when you're talking about money and sending transactions, especially if all of a sudden it gets bogged down and now we're paying, $50 to send, $300 a Bitcoin again. That's a problem.
You're absolutely right. It is. In an emergency situation, they could just fork the difficulty rate again. So they could always do that if they had to. But I think, like you said, also now it costs $50, and so miners are going to take those transactions because now that's offsetting them. So it's like a free market. It's a game theory, and people will start paying more, miners will start coming back online, the difficulty goes down, then they jump out, and it's going to just constantly be ebbing and flowing, and it is going to adjust a little bit slow. It'll be interesting. It's new, and we'll just have to see where it goes.
Exactly, man. So like you said, we're early. We're very, very early in this. But I'm happy to be here. So, Mark, we've been going for almost an hour. I don't know what you got. Do you have anything else? Or I think we covered a lot today, man. We're all over the place.
You got any questions on your side that look good we should jump into?
I don't know. There might have been a few questions in here. Does anybody got any questions for Mark before we get going? Or, if you guys want, like I said, I do have his channel in the description. Mark does usually about one video a week, but, whereas I'm putting them out daily, he comes out with these like really specific, it's almost like watching a DVD, man. It's like every day, it's like a brand new topic. So,
well, you know what I always say when I start my videos is I say, I'm going to tell you what I would want to know if I was on the other side of the table. And so that's kind of what I'm doing. I think it's all about knowledge and perspective. And so, we're just trying to do that. So, if you're watching me on K-Dub's channel, please come and subscribe. And if you're on my channel, please go and subscribe to K-Dub. He does an amazing job of keeping everybody up to date every day on what's going on. It's a really big job that he does for you guys for free. So make sure you give him a follow as well. And give us some likes. We need likes and thumbs up, guys.
Thanks, Mark. It's the least I could do is bring you guys what's going on. Like I said, man, I remember one of the things that really just bothered me when I first got into crypto is I just couldn't keep up with the damn space. A lot of us have day jobs. We don't have time to watch these charts and listen to stuff. So that's kind of like where I came in, and I just want to help people to just, get involved, know what's going on, and just kind of provide a fun place. It's all about community, guys. There's way too much bickering, way too much tribalism going on right now in crypto. The last thing that we need to be doing is fighting and tearing ourselves apart from the inside out. I completely disagree with that. Bullies in the space that are laughing at people. You bought this coin, you're so stupid. There's just nothing that pisses me off more than that. That's the last thing we need right now. So
yeah, and what I would say to that is ignore that. It's a shame to see that anywhere in life, really. But if you did get wrecked, that saying, right? I either win or I learn. So learn. Okay, I'm going to do it right. Luckily, you're going to have a second chance. So luckily, you have a second chance. Do it right. Learn from your mistakes. Take your profits. Use position sizes. Allocate only a certain percentage, and just do it right. I've got a question that just keeps popping up. Edwin, I don't know what your question is, so say it again. Ansi's asked a bunch of times news on Syndicator. Syndicator is a cool project. It's a project that I've talked to the founders on personally a few times. I'm a big holder of Syndicator, and they're still doing things. So again, I'm looking for innovation and adoption, and I see that happening in their project: continuous innovation, continuous adoption. And so for me, I continue to believe in it. Now, the price obviously is completely destroyed.
Everything is destroyed, though.
Everything.
What coin did well? What coin has actually done well? None. Bitcoin did pretty. XRP did pretty well. It's up about 36% over a year. That's really it, though. There's really nothing else.
That XRP army is fierce out there, man.
Yeah. No, that's cool though. Listen, I don't hate. Listen, everyone's welcome on my channel. You can talk about whatever you want. We have a Telegram group, the Crypto Zombies Telegram. The link's always in the description. Go ahead. I don't mind if you want to shill your coin, but come at it with a little bit of fundamentals. Like, tell me why. What do you like about it? Like, give good reasons. That we need to help each other in this space. Not throw weapons at each other.
Oh man, you're so right, and I love that you brought that up, and that's exactly right. And like I said, I love people put comments on my thing because I always love to interact, and I like to talk because I believe like nobody's experts here, right? We're all discussing these things, and man, like I have changed my views and the way I look at things over periods of time as I discuss these. And so it's important, right? Nobody's a genius, nobody's a guru. We're all learning together. What I would like though, and like what Kate just said, like if you're going to shill a coin, tell us why, right? Like fundamentally. And the same I would say is if you're going to ask a question, like don't just go, what do you think about this coin? Say like, hey, I've been looking into this coin. This is what I've found. I'm having a problem with this. What do you think about this particular thing? And that way we can really kind of adjust your question. But when you say, hey, what do you think about this? Well, I don't know. I got a million thoughts, right? So we're always up for this discussion, right? And we all learn together.
Mark, thank you so much, bro. I really appreciate it. I had a lot of fun tonight. This was really great. It's nice to talk to people that have experience, because, like I said, I never even looked at a freaking I don't trade, in real life. I was never a stock market guy. And, I got into this and, your whole life just changes so fast when you get into crypto. And I have to say, though, the one thing, although, yes, I have lost money, other people have lost money, the learning experiences that I've, had in just the past year, I would never have gotten this from college. I would never have gotten this from, you know what I'm saying? Just real hardcore life experiences. And it's just an honor and a pleasure to, be going through all of this with you guys at the same time. So thanks.
Hey, that's such a good point that you brought up. And that's one thing that really excites me about this space is that, I was kind of raised in this kind of political household. So I kind of grew up with this. And I've always been into the politics side and the money side and all these different things. And so that's why when I first heard about Bitcoin, I was instantly attracted. I'm like, oh my gosh, that's it. But most people don't know about that kind of stuff, and it's really opened up eyes for a lot of people. Most people a year ago didn't even know what the word fiat was, and today fiat is just being thrown around like it's nothing. Now people understand fiat currency is fake currency. People understand money's being printed inflation. People understand these, and it's really making people educate themselves, and that's the most powerful thing. And if we get nothing out of this space, the shift that we're getting in people's mindset is worth it.
Mark, like you said, it's the information. It's out there now. People are finally, like you said, we have more than just 3 channels. Before we had the illusion of choice, but it was an illusion because really we were just picking from predetermined outcomes. Whereas now we actually have that ability to do our research, do our own deep diving, and understand these things. And it's harder and harder for these guys to keep the lids closed because people are waking up in multiple different ways. You know, people are waking up when it comes to health, people are waking up when it comes to finance, and people are waking up when it comes to what is yours and who should have a right to control it. And I think it's a great time to be alive, man. It really is.
I agree. And that was a point I made I said, to get really wealthy, unfortunately, you have to be lucky. You have to have the right timing, but we're all lucky. We're born right now. Like, we're here, right? So we're all lucky, and like you, I'm just so happy to be here right now.
Awesome. Mark, thank you so much, bro. We're going to definitely end it right now, but like he said, definitely everyone that's watching, smash up the likes for everybody. Go to Mark's channel, check him out. He does some really cool stuff. He gives away tons of just free information, which is it's really actually commendable because, you know, some people are out there charging courses and stuff, and you're just like, hey, man, experience, let's learn together. So I really appreciate that. And you're welcome back anytime you want, bro. Anytime
and I have his information in the description below. You can find me on Twitter, #1 Mark Moss. I think he put my stuff in his description as well. We'll do this more often if you want. So great. We'll talk soon.
Yeah, sounds good, man. So guys, everyone, thanks again. Love you guys, and until next time, stay crypto and peace out.